But let's talk about IT sector, especially let's talk about Mindtree. We had the two large caps come out with their earnings. That was TCS and HCL Tech, and both of their numbers disappointed the street. Mindtree, on the other hand, reported a good set of numbers. Nevertheless, the stock is under pressure in today's trading session. But let's connect with the management of Mindtree. We have Debashis Chatterjee, who's the MD and CEO of the company, joining us this morning. Very good morning, Mr. Chatterjee. Thank you so much for joining us on ET Now. And let me first begin asking you that earlier you had said that you're confident of H1 growth momentum, but watchful of H2. Now, with the quarter one behind us, any more clarity on whether 5% plus constant currency growth can continue in the second half?
See, we have already called out in the last quarter that the first half of FY23 looks quite robust, and we will continue on the journey of our profitable growth story, and that's what is reflected in Q1. And we are very confident that we should be continuing this trajectory as we go along. The only thing that I will call out is, there are certain specific clients in our portfolio where we have seen a bit of pockets of softness, and we are watching that very closely. But at this point of time, we are very confident that the first half of the year, as we said earlier, will be pretty good, and and we will see how the second half plays out, and we'll probably get better clarity as we move into the quarter.
Right, Mr. Chatterjee. This is Vinny Motiwala joining in as well. You did say that, you are expecting a good trajectory, a maintainable trajectory going ahead in terms of growth. But what about your EBIT margins and EBITDA margins? EBIT margins currently at 19.2%, EBITDA margins at 21.1% are, quite better than the company's own guidance, which was coming in at around 20% and plus. Going forward, how much of this 19%, 21% is actually sustainable?
Well, that's a profitable growth story. I think we have been talking for a long time that there is no point of growth unless we have a sustainable margin. And we decided that we will keep it at the range of 20 plus. Now, that doesn't mean that every quarter will be, a certain, whether some quarter may be 19, some quarter may be 21. But over 1 year, we are very confident that our margin story should hold good. So that's the way we have planned. And please also understand that the margin is not a one-quarter phenomenon. It's a disciplined execution. It's a team which has been formed, and they are doing a terrific job. And I'm very confident that the way things are working out, we should be able to withstand any sort of pressures and continue with the margin story.
Heartening to know, Mr. Chatterjee, that you will look to continue with this margin growth. But let's talk about the deal wins, and they were exceptionally strong in the quarter gone by. $570 million versus average of around $350 to $400 million that we've been seeing. Do you think that this particular deal win momentum is sustainable going forward?
Well, I think, again, if you look at deal wins, if you look at the order book, it was $570 million for this quarter, and same quarter last year it was in the range of $504 million. So it's almost 13% year on year. But having said that, we tend to have this quarter where we do some renewals with specific clients, and we tend to have a larger order book this quarter. But this is the highest ever in the history of the company, which is commendable. But again, you should look at the overall order book on a yearly basis. And we normally go by the year on year, and that's a good measure for us in terms of looking at where we end up with the order book. But also, one of the things that we have called out earlier, that we have seen some short cycle deals, which are more iterative, where, in the product IT model, where clients may not be committing for a longer term, but we know very well that being a strategic partner to the client, we will continue to get more opportunities as we go along. And that's exactly what happens. So essentially, it's not necessary that all the time the order book will reflect that sentiment. But I can happily, I can gladly say that the order book that you see has got a good mix of, multi-year opportunities as well.
Right, Mr. Chatterjee. And let's move on and talk about the on-ground situation. What is the reading in terms of the demand coming in? Especially, TCS as well as HCL Tech. Both of these companies said that there is no problem in demand on ground. But you had flagged off, that there was some problems coming in with a couple of clients and a delay in terms of discretionary spends. So what is the current situation there?
Well, I think the demand is it depends on the portfolio of clients you have. It's very specific to the clients you are managing within your overall portfolio. And, a couple of our clients in the retail and CPG, they have been impacted by, their markets in Russia and Ukraine. And they have always also been impacted with respect to the supply chain because they were relying on China and there was a lockdown in China, which impacted their supply chain. So these are all individual client specific, some specific softness with respect to specific clients. I won't like to generalize that overall, but at an overall level, our demand still looks very strong. And we feel that barring a few pockets where there are some delays, etc., we still haven't seen the clients changing their plans in terms of the overall full year.
Mr. Chatterjee, the cash levels of Mindtree is at record high levels, and that brings me to my next question. What are your utilization plans?
Well, this is something that we have always said that we always have been paying dividends. That's something which has been a consistent story within Mindtree, and we also are looking for opportunities with respect to M&A. When we get the right opportunity, we'll always leverage the cash. And of course, the merger is on the card, so I think some of these things will change as we go along. We are hopefully hoping that at some point of time it will operate as a merged entity. But our plan with cash is always to look at opportunities of M&A, and when we get the opportunities, we'll always do it.
Okay, and since you did touch upon the merger topic, I do want to ask about that. What is the update coming in on the merger front, and any initial clients and employee concerns on merger front that you're seeing?
Well, let me just briefly tell you from a timeline standpoint. We announced on May 6th this year, and we were very clear that this kind of a process takes around 6 to 9 months easily for everything to come to closure. If we can do it earlier, nothing like it. I have personally participated in many investor meetings, met a lot of clients, met a lot of partners. I was in the US some time back. The overall feedback is very exciting. I think the partners are excited. Some clients had a few questions, and we ensured that proactively we address all the questions. I personally got involved in terms of addressing all the, any concern that the client had. And the concerns were more understanding the rationale of the merger. And once we explained that, I think they were very convinced about. So I don't think there is any specific concern with respect to clients and partners, etc. So essentially, from a timeline standpoint, just to give you an update, we received the NOC from Stock Exchange on June 16th, and we are awaiting the further regulatory approvals. There is a steering committee which has been set up, which is monitoring the progress, which is also focusing in terms of the integration plan. And we are hopeful that the timeline that we have laid out, we should get going within that.
Attrition actually continues to be elevated, Mr. Chatterjee, not just for you, for the entire IT industry. What's your sense? Do you think that this will taper in the next quarter or the quarter that we are in, that is in Q2, or will it take some more time to actually stabilize?
Well, I have always called out that it will take a few quarters to stabilize. And if you ask me, I think we have seen the very early signs of a little bit of stabilization, but it's too early to call success over there. But the attrition is not something which is specific to one organization; it's an industry phenomena. So everybody is kind of focused on how to contain it. We have got enough measures that we have put in within the organization to ensure that we can control the attrition, and it's not something that we like these elevated levels, but I don't think we have an option. But I'm hoping that it will maybe a couple of quarters more where it stabilizes and eventually starts coming down, because this is not a sustainable phenomenon.
Okay, so we'll take a couple of quarters to see those attrition elevated levels to reduce. But Mr. Chatterjee, what is the outlook coming in on different geographies and vertical-wise? Any specific outlook that you can share with us?
Well, I think as far as outlook is concerned, I can say that we are watching the macroeconomic developments very closely. And when we talk about outlook, again, it's depending on what our clients are thinking about. And we work very closely with our clients. We stay very close to them, ensure that we align our plans with respect to their plans. And as I said, our H1 has been, we are very confident of H1, and we are watching, we are cautiously optimistic as far as the H2 is concerned. But I don't think there is any immediate significant red flag at this point of time. So overall, we feel that we should continue on the trajectory of profitable growth as we have always been calling out.
Okay, Mr. Chatterjee, thank you so much for joining in with us this morning on ET Now. It's always a pleasure having you on the show. But with that, we're going to slip into a very short break, but stay tuned in because we will be taking your stock-related queries after this break. You can send us your queries on YouTube or WhatsApp or any of our digital platforms. So do start sending us those queries.